welcome back to a new video. Today I want to talk about volume POC since I saw a lot of people asking how it works and you see me trading it like all the time. I think it's one of the best things you can use and I normally base my trade completely around that. So if I see a reaction of it, I want to find confirmations that just kind of confirms that this volume POC is right. So I'm gonna talk about volume POCs fully now, since I normally just tell you how it works and combine it with something, but I want to make a video completely about this now and tell you how to use it. And if you know how to use it, then you can just rewatch the videos I made before, so you can use my entry model. So basically, volume is just the point. It's already in the name. There's a lot of volume, so a lot of people talking and trading. Sorry. So you have a point like this. This would be the most volume in the area you marked out. So if you take it from here to here, you will see that here is the most volume in this area. So you know that this is the point where the most people traded. So there's a lot of different opinions, as you can see. It normally, where consolidations are, there's a lot of volume because there's a lot of ideas, I guess. People want to sell and buy, and it's normally consolidating around it. But in the moment, people actually go like all the people agree to something, it will impulsively go away from it. And this is the point where we want to enter. There's a reason that this happens, and we want to catch it. And since market always moves like impulsive retracement, we want to catch the retracement then and then go with the flow, kind of. Since we know there's a reason we went out of this range, we made a bigger structure here, we have the retracement now, we can catch the retracement, and it's probably gonna go further. It's just one confirmation, but it's a really strong confirmation in my opinion, since here are a lot of people trading, so if there's impulsive move, there has to be a good reason for it. You don't even like you could be trading based off this only, but this would be like shit. You normally always want to have multiple confirmations. So I normally wait for the retracement, take my Fibonacci, since this is a thing that got backtested so often that you just know that from the stats alone, you know that it's probably gonna retrace or react to this zone, and it's also good for backtesting and kind of journaling your trades, since you have a set amount every time. You have the same Fibonacci retracement, the same golden zone, and you could even use as TPs those here. You can use this as the TP, and you have the set thing every time for backtesting. This is so good, since it's nothing that is different every time. It's always the same. So you can just trade basically and or backtest and have the same trades every time. There's nothing that can be a different opinion or something. It's always the same since it's numbers, you know. So it's objective, not subjective, or it's not something that comes from experience. It's something that you can actually backtest. Obviously, you want to have something from experience, but this is one thing for TPs and also the zone, the reaction, that it's good for journaling. So I always want to have a mix from subjective and objective things or confirmations. I want to have my objective things, which is the Fibonacci, and I guess the volume is subjective, but the Fibonacci is the objective thing. So I like to have it in my strat so I can backtest it a lot and find rules for my trading and kind of see my win rate exactly. And that's why I like it. Okay. I want to quickly introduce my partner, my Flash Funding. I'm not just saying this because they're my partner. I really like this prop firm and I think it will be one of the biggest in the future. They have such a small profit target by just 6%, which is easily obtained by just two 1 to 3 risk reward trades. And if you want to get yourself an account, this is my code. Link is in the description. And let's go into the video. So, where do I mark volumes? I normally want to see big consolidations. As you can see here, I learned this from searching for RMDs or like accumulation, manipulation, distribution. I learned how to find accumulations, but you have to find it for yourself. I normally look for something that always stays in one area. It's obvious, but I want to see a clear high being made, a clear bottom being made here, and then it's just staying in this box. Doesn't matter. It could even go like this here, as long as it stays in this box, and then you can just mark it out. And if you have it marked out, you can use the volume POC here, from here to here, and you have a point where there's a lot of volume right there. We can mark this out, and same thing for this area. This doesn't look like a consolidation, but it's really choppy movement, so there's still a lot of opinions or a lot of volume. So you can mark this out as well. Here, mark it here. We have 2 points now. We can even I have like a thing where I mark it out like this, so we know it's a high time frame volume and not a low time frame. Down here, there would be a good volume area. You could be even going from here to here. The trendy moves normally don't have as much volume, so it doesn't really matter if you take it from here to here, you will always have the volume POC down here. You know, so it's actually easy to find. But we have this one as well, so you can mark it out. This is kind of how I prepare the charts on the weekend for the week. And yeah, I will talk about opens in another day, by the way. Opens in combination with volume is a really, really good thing. And you could even combine it with smart money concept. You could, for example, wait for a sweep into the volume area, into the golden zone. That's what I normally do, and then trade off that. So now we go in lower time frames. What do we see here? Like I'm telling you this. It's obviously not exactly the line because there's a lot of volume here and here as well. Also already, if you go here, you will see it. Okay, I deleted it now. I can make it again, wait. Here you will see that there is around us, there's a lot of volume as well. So what we do is we just want to see a reaction close to that line. And we see it here. It kind of works like a support and resistance actually, but this is a support and resistance that works better in my opinion. We see that it completely went through and then with an impulsive move comes back to that zone and reacts off that zone. So this kind of is the resistance level for us that actually works. And we see a reaction of that here. And what we do now is we want to see a break of structure to the downside, which would be here already, since we didn't have the consolidation yet. So I just think that we're probably gonna continue to go either completely go like down now, or we're gonna retest this area and go into consolidation around this, waiting for a break of structure to one side. And this would make more sense because in high time frame we see we had such impulsive down move. We were probably gonna go up again. This is a lot of market experience, but you will feel when it's valid or not. And this is something, that's why it's still subjective. You will see that this is not valid. It's a reaction of it. But overall, we see market is so impulsively going down, there has to be a retracement at some point. So what I think will happen is it actually gonna react to this fair value gap here, go up here, makes a consolidation around this, makes a breaker structure above here, makes a retracement. We can go from here to here, take our Fibonacci from here to here, wait for the reaction in the golden zone here, enter on this, make our stop loss right there, aim for this level in some kind of order block here, maybe aim for this with the 0.62 here, and then we have a good trade already. It's that simple. It's a simple trade based on volume POCs, and volume POCs are not hard to understand. And if you see in 5 minutes, for example, but I didn't talk about this, if we see like a consolidation here, you can use it in a way that, let's say this is actually right, what I told you here, that it's gonna happen like this. So we have like the consolidation going back into here. We can mark every consolidation that seems valid around there. So this is, I guess, not that valid, but we can mark it out as well, just so I can have like an example. Let's say this is like a consolidation here. This is not valid enough, but I just want to show you an example. And this happens that it makes a breaker structure here and goes down. So now we're gonna see on the golden zone a volume area as well. So this is a stronger volume, this is a stronger confirmation that it's gonna go up then. So this will just increase the odds of it happening actually. That's why I like to work with volume a lot. You can combine it with a lot of things, with golden zone, with even sweeps, because there will probably be a AMD or accumulation manipulation distribution happening when you see it going away from it impulsively, going down, retracement. There will probably be liquidity build up here, kind of sweeping into this golden zone. So we have an AMD model in low time frame, then going up. We can enter on this, and it's probably gonna do like a distribution until here. We have the retracement. This is the fourth phase, accumulation manipulation distribution retracement, and then we're gonna continue to go up to our TP actually. So if you want, you could make first TP at a consolidation, which would be really bad because of the risk reward, but that's just another thing. And it's gonna probably match with the volume. Since we see, okay, consolidation here, breaker structure here, going down here, consolidating on the volume area here, which makes so much sense. Just look at the market and you will see that it makes so much sense. Because there's volume, there will be a consolidation around here. So my thing that I'm telling you right now, it makes so much sense. It will probably consolidate, impulsively going down. But this is not a like a big volume area, so it's just a fake out. It's gonna go up here, make the distribution, make an impulsive move through the volume area, go back, react to the volume area. Just listen to this, and this makes so much sense, and it happens every time in the market, and I want you to see this, and just add it to your plan. Obviously, if you have a working strat, don't add it. Just just continue to trade the way you are, or the way you use it. But I think volume is one of the best thing you could do, or add to your trading plan, and I did too. Okay, I tapped out by accident, but I just wanted to tell you, yeah, here, for example, this area that I marked out before, there's a liquidity up here, so it's probably gonna aim for this. This matches my Fibonacci 0.62 zone, you know, so it makes sense. We could trade this probably, and I'm giving you the source for the week, by the way, because this is probably gonna happen soon. If I'm not right, I'm not right. I'm not saying I have 100% win rate. I just wanted to tell you that this is a trade idea, and this works completely with volume. And yeah, if you have any questions, just ask me in the comment section. And if you have, like, if you don't want to ask in the comment section, I also have a Discord server where you can join. I will answer you directly. And I'm also like hosting giveaways where I'm giving 500 accounts from my flash funding. And yeah, see you next time. Bye bye.